Hello and welcome back to day 16 of this trading series. Today's trade is going to be showing you a trade that I placed on April 22nd. So you can see it was placed on April 22nd here. However, if you are in the Discord community and you've been following along and you're like trying to find them, you're going to see it posted under April 23rd just because I was late posting this and it got posted the following day. But it was placed on April 22nd. So if you are looking at the charts, make sure you're looking at that date. But if you're looking in Discord trying to find it, April 23rd. Okay, so let's get into the actual trade here. All right, so I am here on US 30 on the 1 minute time frame. I only was using the 1 minute time frame for this trade. I know a lot of times I talk about multi-time frame analysis, but that wasn't necessary for this trade. I was just looking at the 1 minute time frame and using the market structure for that. So what you'll see here is that there was a bearish trend. I did know this. If you've been following along, you've already heard me talk about it, that there has been a bearish trend for quite a while now in most of the videos. So I knew that there was a strong overall bearish trend. I wasn't looking to take anything crazy. I didn't go against it, but I did know that on the 1 minute time frame, obviously things do reverse a little bit and you'll get deeper pullbacks of the higher time frames overall trend, which was bearish. But I knew that there's potentially going to be a stronger retracement, and that could lead to an actual reversal on the 1 minute time frame. If I lost you, just follow along here. But hopefully you guys understand what I said there. So what I was looking at on the 1 minute time frame was this bearish fall that we had here. So the market dropped, it fell. And what you'll notice when the market's dropping, it's going to create market structure. So it's dropping down here, it pulls back into this area, and then it drops again after it consolidated for a little bit, drops again and made a new lower low. Typically, the market would kind of do another little pullback and then drop again, creating that step-like pattern that you've probably heard me talk about in previous videos. But it doesn't do that here. It does pull, then it creates a new higher high, and it breaks the structure that is here to the left. So it goes above that previous structure of consolidation that we had. And that is a sign that the market is potentially losing momentum in the direction it was going, which was bearish. And it's now going to create a bit of a deeper retracement or a reversal on that time frame that you're looking at. And that is what I saw here. So you can see that I did mark up that I had a break of structure to the left. It created a new higher high in this area, my entry. My stop loss I just placed underneath of the consolidation zone that I had here for the previous structure that I was using a break of. And that was more than enough, honestly. Sometimes you may get a little bit of a retracement after you've had a bit of a push like this. I didn't see really any drawdown on this trade, which is always nice. But I was expecting it because it is a potential that it would have come up and then maybe pulled back a bit into here and then done another push up. Like I said, I got pretty lucky. I didn't really have to deal with that. Comfortable with that stop loss, and it didn't really draw down much at all for me, which is awesome. The take profit was targeting a previous area that I was using, and it also happened to be a previous bank number. So if you see, I have talked about this as well, but it was that 38,200 number. So that was a nice rounded number. I thought it seemed like a good place for the banks to maybe want to target. Plus, it also happened to be a level that I know I had used to the left already earlier in the week. So I was comfortable targeting that area. That ended up being slightly under a 1.5, I believe. Yeah, so it was like a 1.2 reward. Not the biggest reward trade. However, I am totally okay with that because this was a reversal. I already said, this was the main trend was bearish and the higher overall trend was bearish. So going against it can be a little bit risky. Plus, this move here was already pretty bullish, which is a good sign, but also can be a little bit risky because you could potentially end up having an exhausted move here and then having a pretty deep pullback or retracement before it would push back up again. Luckily, it didn't happen here. But it could be a risk that you take this. So just bear that in mind if you are going to do something like this. You want to make sure that you're targeting a take profit that makes sense, that you're not overshooting your take profit. Try not to be greedy here if you're going with reversals and going against the trend. I really do suggest like trying to get in, get out, like do stuff, use zones that make sense that you know have previously been targeted already. Like that's my biggest advice there. And that's what I did here. So that's why I was totally okay taking this smaller, I mean, it's not really small. It's a pretty good trade in my opinion, but it's a smaller risk to reward. So this 1,239, I was okay with just like taking that 1.2 reward, closing my trade out for the day and walking away because there really wasn't much else for me to do the rest of that day once it's already like gone. This trade is pretty bullish and the momentum to get in any later in it would have already been lost in my opinion for the 1 minute. For time frame, it would have potentially been already lost. This like the move's gone. So if you didn't get in where I got in and you wanted to get back in, you really need to wait for a significant pullback or a retest of one of your zones that you've like broken through. In my opinion, and the way that I do this this strategy, I would need some sort of like pullback or a retest for me to feel comfortable to get back in. And there really isn't much of that happening because it's so bullish, which is great if you're in the trade in that direction. But if you're trying to get back into a trade or you are looking for like a second opportunity or something to get in, I really would just wait that out. So that suggestion, I do get asked that a lot. Like, what do you do if the trade's already gone? And unfortunately, the answer is like the trade's already gone. You guys know that in your head. If it's already gone, it's gone. And it's not to jump in late. It's to just get in when it's safe or wait for the market to come back and retest a zone. And inevitably it will. It just feels like it never will when you're waiting for a trade. But I promise you, it will come back eventually. It just might not be your time to get into a trade right there and then. And that's okay. So it is what it is. But yeah, this trade I'm totally okay with. I'm happy with the 1.2 reward. If I had to do it over again, I would absolutely do the same exact markup because I think this looks like a beautiful trade to me. And it's a safe trade. It's a higher probability trade with your breakout happening here, the stop loss underneath of that zone that it broke from, and then targeting the next zone to the left. So yeah, that is it for this trade. So that is it for day 16's trade, and I will see you guys in the next one.